Happy Monday, traders. It is 8:01 a.m. Chicago time on the 14th of November, 2022. Thanks for joining me this morning. This is episode number 2357. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, just a lot to kind of account for here. We have a mixed market. The S&P is slightly off. The Europeans are higher, kind of offsetting a little bit. And so the overall risk posture is mixed this morning. In terms of just running through the sheet here, in terms of earnings, we had Tyson Foods this morning. They came in a little bit short, came in at $1.63 versus 1.7, $1.70. They missed, and the revenue is about $13.737 for Q4. AECOM has beat on both ends, and that's really it for earnings. In terms of what's on deck, economic events, news, things like that, the big thing, it's Fed's Waller came out and said that the CPI being off last week is just one data point that the market's getting way ahead of itself. And this is kind of, this is not really what the market wants to hear. But it's true that, this is our first better CPI, even though it's still 7.7% year on year. It's still quite high. It's what Waller's saying, and what the other Fed speakers, Brainerd, Williams today, are expected to caution the market about. Now, the Fed is likely, was also said that the Fed is likely to increase by 50 basis points, which is very different than 75 basis points, which is how much we've been increasing by with every meeting, which shows a little bit of softening, in terms of what the Fed's expecting to push out in December. I think it's December 14th is the FOMC. So the Democrats have won the Senate, power in the Senate. They did get 50 seats, and basically status quo with Vice President tipping the scale. They may get 51 seats, pushing the balance of power over there even further. The House looks to be going to the Republicans, but by a very narrow margin. I think 8 or 9 seats the last time I looked. Just as a note for those who are not familiar with U.S. politics, real quick, when you look at the incumbent or the party that's in the White House, generally in these midterm elections loses somewhere between, I think Obama lost something like 69 seats or 68 seats in 2010, and Trump lost 42 or 46 seats in 2018, switching some of the power over to the Democrats. Very traditionally, a lot of seats are lost by the ruling party, which is the Democrats. But this election here, the Democrats seem to really buck that trend for whatever reason. What does that mean for us as traders? It means probably more status quo, less getting done by the government now that the House is likely to be for Republicans. Not sure if we'll have more spending than what we've already had, but everybody's going to work on the inflation issue, I think, for the presidential election in 2 years. So to me, it just seems like it's likely to be a boon. The way things are set up is likely to be a boon for the equity market. China, 16-point property sector support plan. The Chinese real estate market has been just obliterated over the last year and a half or year, I think, with the defaults. Biden G20 conference. I'm getting a lot of news feeds or news events or streaming news from that. There's a lot being said. This could move us, but it doesn't seem to be having effect yet. And then, of course, FTX. That whole thing is just incredible. There's probably going to be movies done about it. Uh, SBF and his crew are holed up in some residence in the Bahamas that is guarded by police. The U.S. is coming after those players over there, and it just looks absolutely crazy what's going on with the FTX and the crypto market. And then Zelensky, Ukraine's President Zelensky, is saying that they're open to peace. There have been further attacks from the Ukraine into defensive positions in Russia across one of the rivers. Ukraine's really got a head of steam there. Those are the main events. Okay, I spent too much time on that. As far as the calendar today, we had industrial production out of the Eurozone this morning, very strong, 0.9% month on month for September versus 0.6 expected. And then again, we're getting Fed's Brainerd at 11:30. This is going to be important. And then GDP growth out of Japan this evening. The Australian RBA meeting minutes, those can be movers. Not expecting any surprises today. China's industrial production year on year in October, expecting 5.6. That comes out at 9 o'clock. This is a major figure. The OPEC monthly report is also scheduled to come out at some point. Let's turn our attention to the S&P. The S&P this morning, completely balanced. We've been trading absolutely sideways. We gapped down this morning versus Friday's close, so we are off by currently 10 points. The range is very, very tight, 19.5 points. We haven't seen that low a range in quite some time in the overnight session. This is what comes with a rallying market. You'll see that rotations, which by the way were updated this weekend, these rotations, all of these have gone down. Rotations, we expect rotations to go down. We expect the range to go down, although the ranges didn't move very much because of the duration. But we expect ranges, the daily range, normal daily range to go down, the normal rotations to go down. The volume's 215,000 contracts, which is perfectly normal. And the inventory is 100% short. We traded 100% of the volume below Friday's close. And we're holding the point of control higher here at 39.89, 39.90. And we're holding steady. So we're accepting these higher prices. Currently, we did breach 4,000 on Friday, which was kind of expected, but to me, there are some indications that I'll go over here in a minute that this is not likely to last. This rally is likely running out of steam as far as I can tell. Okay, so here's what we've got. We had a gap up Thursday, pretty strong run on Thursday, very bullish close on Thursday. Then we had a small gap up on Friday. We responded, expected this. We responded down to about 51 or so. And then we held a balancy day with a rally into the close. Friday really is just a balanced day with 39.91 or so, shutting off the buyers for most of the session until the close. So what we're doing here is we're really just trading towards 4,000. There's not much to glean out of this chart. Again, last week, big gap, pushed into the balance from this composite back here in August, and holding steady. And then on Friday, really not much more than balance in this big zone. I expect us to be stuck here. In fact, I expect us to run out of steam. The reason I think we're likely to run out of steam is if you look at Friday's action, as shown here, this is Friday's action. You could see that despite the fact that we pull back, push, pull back, push, put in the IB, pull back to the middle, nice little support here at 77 to 74, slide, fall through. There's the 74 support becomes resistance right there. And then we slide above and then we rally. Look at this. We put in a low here. We put in a low in the cumulative delta, which is the bars. Don't pay attention to the orange dash because that's the small lots, and it looks like the small lots were controlling the auction on Friday. But we put in a low in cumulative delta as well as in price. But from here, price starts shifting up while the delta doesn't do the equivalent work. And as we go into the close, just a lot of liquidation into the close. We finished with a delta at the low on Friday of negative 18,000, which is relatively substantially negative for a market that's making new swing highs in the recent month or so. So to me, this looks like we're moving up, but we have a lot less steam. So as we're moving up, they're hitting the bid, they're hitting the bid, they're hitting the bid. They're not really lifting the offer. So as prices shifting up, they're hitting the bid on the way up. And so what we see is not a supported move in terms of delta, and it's all being done by small lots. It's all being done by small lots. The small lots were mainly in control right after this. The IB, incidentally, you could see the IB was created by large lots. The white line. This is 10 lots to 99 lots trading or executing at the bid or offer. When they execute at the offer, that means they're buying, they're lifting the offer. You get a positive delta. When they hit the bid, that means they're selling at market. It creates a negative delta, subtraction of the delta. And you could see that, the large lots were in control early. And then once the IB was in, large lots just fell off and have gone sideways until the close. And then the delta was controlled by small lots, the orange line. So to me, Friday did not create, I think might have executed one trade on Friday. Did not really see that much opportunity on Friday. And I shut everything down quite early on Friday. So I didn't see how the close took place. So here we are. Now we're shifting forward. And we're just looking at delta and price. Now we're shifting forward and we're looking at what it has done overnight. And in the overnight, it opens and it's just completely sideways, absolutely and completely sideways, with the delta being positive so far, plus 5,000 as it's shifting sideways. There's a little bit of buying going on, nothing too aggressive. We saw some buying from the very large lots at the open, but since then it's been mainly controlled by small lots. I expect this to be a relatively choppy day. So if we look at the intraday and what we have done volume-wise, we've moved from a major support, a major area down below, balance area. We've moved away. This is CPI right here. CPI consolidate around the 38.50. Remember the CPI came out and the price was 38.54 or so, and we held that for a bit, and then we've just set that up as a base and have run since then. And you could see that there was a lot of price discovery on Thursday, not so much on Friday, even though we continued with the higher highs, higher lows. But when we zoom in, we see that the overnight session is inside of Friday's multi-distribution price discovery profile and inside of Friday morning's trading. So to me, this is not shifting very well in terms of value. And the point of control on Friday was down here. So this is very significant to understand that the point of control did not move to the high end of Friday's range where price ran. And we did not have the lifting power or the aggressor or the cumulative delta to carry that price. To me, this becomes a serious magnet down below. It is very likely to rotate down into that 67 area today. We're likely to get a gap to settle trade this morning, so we're likely to push into the 4,000, maybe poke by a little bit, but I'm expecting, based on the action on Friday and based on how we're opening today and the action so far, I'm expecting that it's likely to have a hard time holding prices above 4,000, and it's likely to rotate down. So the ideal situation this morning is an open auction. We get a buy push gap to settle trade, which there isn't much room for that. It's about 11 points right now, so the risk reward on that's not fantastic. We get a gap to settle trade to 4,000, push through the 4,000 a little bit, and then the better trade is a rotation from 4,000 to 67 at some point today. That's the main expectation, and that brings us back to this composite point of control for what's on your screen here. Over the last couple of days, the key balance area is this 60, 39.60, comes from here, comes from here. I'm expecting the market to come back to the 67.60 area this morning. I'm going to be looking for indications that this trade is being supported, and that's the trade I'm going to mainly go for. I am a little bit skeptical of the buy side despite the trend. Okay, so here we are again. You could see overnight session so far. This is the profile for what's happened so far. This is a profile for the overnight session, which is all we've had. And what we have is a point of control right here. We have full session VWAP, full session mid, right on top of each other. So we have 89 for the point of control, 87.50 for the full session VWAP, and then as you see on the screen, 86.75. So this is likely to be choppy. So a good day to kind of sit back, relax, not because it might open and be aggressive, but it's very, very likely to chop around this morning before it picks a direction. Again, we have a void up above into the settlement, into the open settlement price. Again, a gap to settle trade that's open today. That setup is open today, but overall, I'm expecting it down here. I don't have much more to say to that than that. I'm not going to draw a bunch of lines on here. I've outlined the key levels. We did finish Friday with a relatively weak high. We actually one-ticked the high on Friday on the close. So that high is not so great. We one-ticked and ran out of time. So what we didn't see is a failed auction. A failed auction is you have a high, then the market tests above that high by less than 3 ticks, tests above. Usually one tick failed auction is the strongest, and then it just rips down. It just shows that it tested that high and found no interest, and now there's confidence for sellers to hammer on it and bring it down. But because it was the end of the day, it was hard to see the true nature of that high. But this is a relatively weak high we're leaving behind, so be aware that we do have a 40-10 weak high, which is very commonly revisited. Not sure if it'll do that today. We'll see what happens when if and when it gets to 4,000. But that becomes the next key target above 4,000. My expectation, again, to be clear, is 4,000, 401, 402, 401, 402, and then back, and then most likely back to 67. That's the trade I'm going to be patient for today. Okay? Good luck, and I'll catch you tomorrow morning. Take care.